Hi, I'm John Stevenson, the Guaranteed Retirement Guy, and let's talk about today about the early withdrawal penalty and how to minimize that impact if you have to take some money out of your annuity policy. All right, so you've got an annuity, you want to take money out, and you're going to incur a surrender charge, a surrender penalty. Okay, that's basically any annuity during the surrender period will have some sort of surrender penalty. Usually ranges between 1 and 10%, depending on how far into the term that you are. So, but let's just say it's 5%. Let's say you're halfway through and it's 5%. Okay, and let's say you've got $500,000 in there. Okay, so, and you want to take out more than the 10% allowable. So right now, they'll allow you to take 10% without any penalty. So you can take $50,000 out, great, no penalty. But let's say you want to take $100,000 out. Well, you're going to have a 5% penalty on anything over the initial $50,000. Meaning, you take out $50,000, that's not going to be subject to any type of penalty. Now, the additional $50,000 during that period, during that 12-month period, of course, is subject to that penalty. And if it's 5%, I mean, that could be pretty substantial. I mean, $50,000, we're looking at $2,500 penalty. So that can be substantial. Now, if you want to minimize that, maybe you're thinking, I don't need all of the $100,000 right now. Maybe I could spread it out a little bit. Well, then just spread it out over 2 years. And if you do that, you're not going to have any penalty at all. Or maybe you'll decide that you want to take out $50,000 in December, and let's say that's just the end of your 12-month period of when you can actually access 10% without any type of penalty. So maybe you can do that, and then maybe after that December, so you've already taken out $50,000, okay? So now it is valued at $450,000 January 1st, the following year. And of course, you are in a new surrender period, which means you could take another $50,000 out without any type of surrender charge. So take another $50,000 out in January. Now you've got an account balance of $400,000 and you haven't subjected yourself to any type of penalty. So that is one way to do it. I do have some people that reach out to me and they're like, I want to surrender my entire contract, but I'm trying to minimize the penalties that I'm going to get. Okay, well, here's what you could do. You could do that same scenario where if you wait towards the end of the crediting period or the end of the surrender period during that, let's say you're in the, fifth contract year and the surrender charge is 5%, okay? So maybe you'll wait towards the end of that fifth contract year. You'll take your 10% free withdrawal. So let's say it's $50,000. So there's no surrender charge. And then since you're at the end of it, just wait a couple more weeks until you're at the beginning of your next crediting period. And then you can take out another $50,000, which is nice. So you can bring it down to now that $400,000 level. And then if you have to surrender that whole policy, maybe it's at a 4% withdrawal surrender charge because now you're in the sixth policy year. And I'm just giving you an example. It's different for every carrier, different for every policy. But in this case, now you're only being charged 4% on $400,000 and you were able to get $100,000 out completely free of any type of surrender charges. So that's what you could do, especially if you're looking to exchange it for a better policy, and maybe that policy is giving you a 10% or a 15% bonus. That is actually going to be a really good situation because then, you may have 4% on the surrender charges, but if you got another 15% from a bonus in another policy, you're actually up 11%. So there are ways to minimize the impact of surrender charges if you do it right. So anyways, if you have a specific annuity in mind and you are thinking about surrendering it and you're thinking about different strategies and you're wondering if it is even a good idea, maybe we should chat, okay? If you want to book a call, you'll notice there's a link below this video and we'll look at your policy. We'll see, all right, how many years are you in? What are the surrender charges right now? Have you taken any withdrawals right now? We can kind of strategize and say, all right, how can we best do this so we can minimize the amount of surrender charges that you'll have? Another thing to look at is the guaranteed minimum contract value, because a lot of times that could be higher than what the surrender charges would be. So if the surrender charges are $100,000, but your minimum contract value would basically stipulate that they only take $50,000, that would be good to know. So bring your statement and we'll look at that together as well. So anyways, I hope that helps. If you got questions on annuities, you got questions on retirement planning, on guaranteed income planning, or if you're just looking for just better growth strategies without market risk, then it might make sense to book a call with me. So anyways, I hope that helps. Leave me a comment below in the comment section and, or book a call, and we'll chat at that time. So thanks again, and we'll see you in the next video.